Tesla is struggling to hold its ground, and the US dollar is under siege. Could this be the tipping point for America? As global power shifts and challengers rise, both Tesla and the dollar are facing existential threats. Will the US find a way to fight back, or is this the beginning of its decline? The world is changing fast, and the question is, can America keep up? Tesla just took a massive financial hit, more than $800 billion in market value wiped out. In just 6 months, its stock has crashed over 50%, shaking investor confidence as competition tightens and its strategy gets murkier. The real shocker? A brutal 15% plunge in a single day, followed by another 3% drop after hours. This is not just a bad trading day, it's a wake-up call. The electric vehicle industry is shifting fast, and Tesla, once the undisputed leader, is suddenly looking vulnerable. For years, Tesla defied the odds, setting the pace for the entire industry. Now the question is, has it lost its edge? Is the company that changed the game about to become just another player struggling to keep up? China just hit Tesla where it hurts. A new 25% tax on high-end cars like the Model S, plus a 10% tax on crude oil and US-made vehicles is more than just a trade war move. It's a direct strike on Tesla's bottom line.
10% tariff on Chinese imports went into effect at midnight. China retaliated immediately. A 15% tax on U.S. coal, 10% on U.S. crude oil, and large displacement cars and pickup trucks. Also,
with tariffs piling up, Tesla's production costs are soaring. The company relies on a global supply chain to stay ahead, but now, the world's biggest electric vehicle market slipping out of reach. That's bad news, especially with homegrown giants like BYD and NIO gaining ground fast. This is not just about Tesla losing its grip in Asia. China's latest move could be a sign of something bigger, a world where trade barriers are no longer just political weapons, but tools to shift the balance of economic power. Tesla once ruled the electric vehicle world, known for its cutting-edge tech and innovation. But now, the company is facing fierce competition from Chinese automakers like BYD and NIO, who are coming for Tesla's crown in a big way. What makes things even tougher, these new rivals aren't just matching Tesla in features, they're undercutting them on price. Take BYD's electric vehicle, for example. At just $30,000, it's way more affordable for the average Chinese consumer than Tesla's Model 3, which costs a steep $43,000. In 2023, BYD claimed a whopping 25% of the Chinese electric vehicle market, while Tesla only sold 350,000 cars. Nothing impressive in a market where demand is soaring. The rise of local brands is a clear sign of what's happening. Chinese buyers are turning more and more to homegrown options, not just because they're cheaper, but because domestic companies are quickly catching up in terms of tech and innovation. If Tesla doesn't rethink its pricing strategy and make adjustments to fit local tastes, it risks losing its grip on the world's biggest electric vehicle market to the very competitors it once led. Tesla is not just struggling in China. It's losing ground in its home turf and beyond. Back in 2020, the company owned a staggering 79% of the US electric vehicle market. Fast forward to 2023, and that number has dropped to 54%. The message is clear. Tesla is no longer the only game in town. Legacy automakers like Ford and GM, along with a wave of new EV startups, have jumped into the race, with cheaper, more consumer-friendly options chipping away at Tesla's dominance. The situation in Europe is even worse. Tesla's sales have plunged by 30% as buyers turn to homegrown brands like Volkswagen and Renault. Meanwhile, Chinese automakers are making their move, expanding fast and giving European consumers even more choices. Once the face of electric vehicle innovation, Tesla now finds itself in a battle for relevance in the markets it once ruled. Without a bold shift in strategy, the company risks fading from industry leader to just another name in the growing crowd. Tesla used to be the shining example of innovation. Everyone looked to the company as the future of driving. But that image is starting to fade, and part of the reason is Elon Musk. His controversial statements and growing political ties have caused a serious drop in customer loyalty. What was once a brand driven by cutting-edge technology is now increasingly seen as a company caught up in distractions that go far beyond cars. Meanwhile, Tesla isn't the only electric vehicle game in town anymore. Companies like BYD, Volkswagen, and Lucid Motors are stepping up, offering cars that rival and in some cases even outshine Teslas in key areas, whether it's price, technology, or features. The monopoly Tesla once had on innovation is under serious threat. If Tesla doesn't focus on what made it great, its products, it risks losing an entire generation of loyal customers to the new wave of brands that are stepping up to fill the void. As economic tensions rise, China is playing a smart game to weaken the US dollar's grip on global markets. One of its biggest moves, retaliatory tariffs aimed squarely at key sectors of the US economy. Take coal and crude oil, for example. China has slapped a 10% tax on these US imports, hitting the energy industry hard, an industry that relies heavily on exports. But for Tesla, the stakes are even higher. China has imposed a hefty 25% tariff on high-end models like the Model S, which means higher production costs and steeper prices for customers in China. This puts Tesla at a serious disadvantage, especially when local car makers can offer similar cars at lower prices. These tariffs are more than just a response to US trade policies. China is quietly positioning itself to reduce its reliance on the US economy and the dollar. If this trend continues, the US could face bigger challenges in holding on to its power on the global stage. China is making a bold financial move, slashing its holdings of US Treasury bonds and slowly cutting ties with the dollar. This is not just a defensive tactic against Washington's policies, it's a direct hit to the US economy. As one of America's biggest creditors pulls back, demand for US government debt drops, creating a ripple effect. Interest rates on US debt will climb as the government scrambles to attract new investors with higher returns. That means borrowing costs will spike, not just for the government, but for everyday Americans. Mortgages will get more expensive, stock markets could take a hit, and businesses will struggle with pricier loans. If this trend keeps up, the US could be staring down a financial storm. As the dollar's grip on the global economy weakens, the world may be on the verge of a major financial shakeup. China is making a big move to break free from the US dollar's grip, stockpiling gold at a staggering pace. In 2024 alone, Beijing added 250 tons to its national reserves, sending a clear message. It is preparing for a world where the dollar is no longer king. This is not just about protecting itself from economic uncertainty, it is a calculated step toward reshaping the global financial system. With more countries looking for ways to trade without relying on the dollar, gold is becoming the go-to alternative, a stable and trusted asset. If this trend keeps gaining momentum, the US could face a serious challenge. The dollar's status as the world's reserve currency is what gives the US its financial power. But if gold and other currencies start taking its place, Washington could struggle to control international money flows like it once did. A new financial order is emerging, and China is making sure it is ahead of the curve. BRICS nations, China, Russia, India, and Brazil are making a bold move to shake up the global financial system. They are rapidly building up their gold reserves, not just as a shield against Western sanctions, but as part of a bigger plan to break free from the US dollar's dominance. But it is not just about stockpiling gold. BRICS is also creating new ways to trade, using local currencies and developing a payment system that bypasses SWIFT, the US-controlled network that has long been a key tool of financial influence. If this trend keeps growing, Washington could lose a major lever of power. With gold and alternative currencies gaining traction in global trade, the dollar's grip on the world economy could weaken, marking the beginning of a massive shift in financial control. The US dollar is losing its power, and the consequences are hitting hard. For years, the US has been able to borrow cheaply, running big deficits without breaking a sweat, all because the dollar was the world's go-to currency. But that's changing fast. As China, Russia, India, and other BRICS nations build up their gold reserves and explore ways to trade outside of the dollar, the US is starting to feel the pinch. Borrowing is no longer as easy or as cheap, and the financial cushion the country once relied on is quickly slipping away. The US is losing its grip on the global economy, and with it, the power to use the dollar as a tool for financial control. For years, the dollar allowed Washington to freeze assets, block access to the US financial system, and impose sanctions with ease. But as more countries move away from trading in USD, those tools are losing their bite. If this keeps up, the hold the US has held over global finance for decades could start to crumble. The world is stepping into a whole new financial era, where gold and currencies outside the dollar are starting to take the spotlight in global trade. The days when the US held all the economic power are slowly fading. More and more countries like those in BRICS, along with other rising economies, are taking center stage. This isn't just a shift in how money moves. It's a major geopolitical change, signaling a new world where the US doesn't hold all the cards anymore. The struggles of Tesla and the US dollar are more than just temporary bumps in the road. They're signs of a bigger shift in global power. As China and other BRICS nations build their gold reserves, move away from the dollar, and push for alternative ways to trade, the US is facing a real challenge. How can it hold on to its financial and technological edge in the face of all this change? The big question now is whether Washington can find a way to keep the dollar at the heart of global trade, or if we're watching the rise of a new financial era where gold and non-dollar currencies rule. And for Tesla, if the company doesn't adjust its pricing, improve its tech, and win back customer loyalty, can it weather this storm, or will it fall behind in the electric vehicle race? What do you think about all of this? Drop your thoughts in the comments, and don't forget to subscribe for the latest updates.